sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some updates for Bitcoin, also the New York Stock Exchange, XYO, Phantom, and JASMY. We go ahead and get it started here. I'm just going to quickly and briefly go over this chart. I've touched on it a lot recently, but I just want to again point out this MACD flip that we are seeing right here. We saw it back here in 2019, bull market began. We had the March crash happen, given the current phase that we're in being in phase one of Bitcoin cycles over time. But if we actually go back to these previous two back here, and you can see each of these bubbles again are just where I have circled them. This further shows, you can see we get these flips right here, and ever since that has happened we see the price just drastically go towards the upside. But the main thing for this chart right now that I wanted to really touch on is that I did mention in the previous video that we do need to continue to push above this descending channel right here. Right now it's really pivotal at around 20 to 21,000 to eventually break out of this and have the candle open above that point. We have about 5 days left in this current 2-week candle, so hopefully best case scenario we'd see Bitcoin pump up a little bit more, which would allow for the next candle to close more outside of this channel that we are currently in. But something to kind of go against the bullish sentiment that I guess the drastic bullish sentiment that I've been pushing recently is this analysis right here, which I've just seen this going around. I decided just to do it in my own way, but what I want to point out is you can see this, obviously this pretty self-explanatory, these two black trend lines on both of our current, or the previous bear market in 2015 and our current bear market. We have this 9-wave formation towards the downside, and I have for actually quite some time, many months at this point, pointed out how similar, ever since back here we got this rejection from 48,000 lower, I've been pointing out how you can see this little W formation that we made right here in this area back in around January to around February, March of 2022. We saw a bearish Gartley in terms of harmonic price patterns form right there, which is what led us into our rejection. But if you just go back to this previous bull market right here in 2014, around September to November 2014, this right here, so from about $670 all the way down to this first bottom of this range we set back here in 2015 at around $216. Overall, it's an ABCD pattern which has a bearish Gartley in between it, which connects the two bearish legs towards the downside. But this is what we are seeing basically, and is what this 9-wave is pointing out. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9 leading towards our downside. And you can just clearly see, we see this massive M right here. We see this, yes, it looks ugly. It doesn't look like a beautiful M right here for 2014 to 15, but we see this M after this first initial downside. Again, the first initial downside in comparison for our current bear market would be March of 2021, so 64,000 down to around 23,000 or so in July of 2021. So we see that initial downside, again we see this massive M, and then we're led into a smaller M, which is forming the range of our bottom. So if we go back to 2015, we just see again a horizontal flat, basically bottom range when we make this M. In our current bear market, we've seen this slanted diagonal M range right here set. So because of the self-similarity that we are seeing within these two bear market structures, again, there is that possibility that, as you can see down here, I'll go ahead and draw a circle on it right here and right here. We could potentially see a very massive bear trap if we do see heavy resistance or rejection or retracement towards the downside, but I don't think it will. As you can see, it didn't back here go any lower than the previous lows it set. I don't think if this does happen we will go any lower than the current lows we've set. If this does happen, I think it'll present a fantastic buying opportunity. So if that does happen, I would personally really think about putting another buy-in and around 18.8 to around whatever our current low is, around I think it's got to be lower than 16.2. It's like 15.5 given this is the line chart and it looks a little weird, but if it does happen, I wouldn't see that as, again, like I said, it would very likely be a bear trap. I mean, going back to this chart again, I just want to really stress this MACD flip that we have down here, and how I pointed out that it's happened literally every single bear market since 2012, and it has been foolproof each time. We have one major downside. We even see, actually, which again further connects the two bear markets that I'm pointing out on the other chart. You can see how we had this kind of lightning bolt ABCD pattern to the downside again for this 2014 to 15 bear market. And then we go to our current bear market. Again, we see the same lightning bolt ABCD pattern with the same flip at the bottom. So again, heavily stressing that MACD flip there. I do personally think that we're going to continue to go up from here. If you actually, let's zoom in on this a little bit. You can see that we did, but the way that I have it currently drawn on here, this trend line, we did break out a little bit and then continue to go back under. But if I do just move this a little bit to kind of cut off a little less than I have at the current moment, we really didn't even touch it, the trend line right here. If I try to do my best to not cut off anything, if I take it back right here, doesn't really show anything. But again, just in general, just look out for the potential of this bear trap, massive bear trap right here. I really cannot move this trend line at all. Again, we've broken out again, like I just mentioned, that did happen in that previous bear market that I'm talking about, 2014 to 15. So we could likely see some draw down here. I mean, who knows what it'll look like, something like this, and then we'll eventually go back towards the upside. But again, I personally don't think that this is the most likely scenario that is going to end up playing out, but I just wanted to point it out just in case it does happen, and just because I try not to be a full-on bull all the time. I mean, that's usually always my bias, but one, this channel is not meant for financial advice, and two, I don't want to people that don't have enough emotional or psychological development. I don't want to make people make a stupid decision. Which again, if you're making decisions based upon other people's analysis, I mean, it's usually not the best decision anyway. But outside of that, this is the main update that I want to put out for Bitcoin in this video. This is the weekly chart. First off, we have these trend lines, this trend line range around here. So these two black ones, you can see ever since 2017 right here, towards the tail end of the previous, the previous cycles the bull market, towards the very end of it, towards 2017. We see the bounce right here to finish off the bull market. This is what we got the bounce on in 2019. This is where the March crash bounced off. Essentially, we had these wicks below it, but this is right where the candle closed on and then bounced from. And then right now, this is what we touched after the FTX crash during November, and that's pretty much what we've consolidated on until we finally got this burst towards the upside recently. And again, you can see down here on this RSI, we have broken above this median line right here very drastically. I mean, once that happened back here in 2019, bull market was on, and once that happened right here after the March crash, the bull market was on as well. And again, I'm only going to go over what I just went on this RSI because that encompasses the current phase that we're in of the cycle 3. Again, we're in phase 1 of cycle 3, which phase 1 of the current cycle once more begins at the end of this bull market at 2017, all the way out to our current time. We see this massive W right here leading into the March crash. We see the double bottom play out, which led us to the $64,000 top, which then brings me into, again, we've been seeing our bear market here, which is now going to then transition us into this ABCD pattern. Again, I typically kind of just, in a layman's way, just refer to it as a lightning bolt pattern because that's quite literally what it looks like. But I have these two date and percent measurement tools. You can see, given again, like I mentioned, we are in phase 1 of cycle 3. Just to briefly go down on it, ever since Bitcoin has come out, it has been just in a self-similar fractal-like way, repeating the exact same cycle with a degree of logarithmic decay over time. And by that, I mean just a general common knowledge fact, if you've been in this space long enough, that the cycles, the phases themselves are lengthening The bear markets are lengthening in time, they're getting less severe. The bull markets are lengthening in time and they are becoming less bullish as well. You can see again, so we are in the pretty much the second half of phase one. In the past I've referred to a cycle as a phase 1, 2, and 3, and phase 1 would be this massive W I talked about, and then phase 2 would be this lightning bolt pattern, and then phase 3 would essentially just be this valley formation we see from 2013 to 2017, which is again what we will head into after we make this upcoming high, assuming what I'm talking about is even right in the first place. But anyways, we see from the March crash to the $64,000 high, we saw it happen over about 57 bars, so 57 weeks at around 1,545%. Again, that is what should line up given the self-similarity and a fractal-like nature of Bitcoin's behavior and pretty much in general all of the cryptocurrency market and even the stock market. Like I said in my last video, I know a lot of people think fractal patterns are stupid, but again, as I mentioned, the universe itself, nature, is very self-similar in its structure, meaning fractal-like. I mean, if you look at the way flowers form, the way hurricanes form, tornadoes, galaxies. Again, I am a polymath, so my main discipline's in physics, so I will say that I do know what I'm talking about when it comes to that aspect. But outside of that, again, I wanted to reiterate these pi cycle highs and lows. I adjusted a little bit since that previous time because we had this, unfortunately, had this FTX crash and whatnot, but I do generally believe this is the bottom. A lot of other people are as well. There's also a lot of psychological cognitive dissonance in the space right now, which typically also reveals that the bear market has ended and the bull market has begun. So hopefully we will continue to push up from here, again, similar to how things behaved after March to 64,000. I don't think it's going to be exactly identical. I mean, it might nearly be exactly identical, but I think it'll at least, like I said, just be self-similar. According to this weekly chart, we'll see a move up on the weekly chart to around like 25, 28,000, sit there for a little bit, and then we'll move to like 35, 36,000, have a small retracement down to like 30, 29,000 maybe, and then from there we'll just see parabolic movement up into the general range, like I've said, 200 to 300,000. I think 242,000 is what I'm specifically saying, although I would say around 250,000, give or take like $30,000, is a good general smaller range to look out for outside of 200 to 300,000. But also another interesting thing about this is this ABCD pattern and the fact that according to the self-similarity and the harmonic structure of Bitcoin, this ABCD pattern almost lines up perfectly, and the fact that A to C is 0.81 and then B to D is 4.81. So again, that's just another confluence there to be seeing. That is nice as well. Also with this 350 daily moving average band, you can see how back here we bottomed out. So this light blue line you see right here where my cursor is, and is the negative 1.618, and then the light green, the pastel one down here, is actually, I don't actually remember what it is. Let's see here. You know what? Oh, here we go right here. So it's okay, yeah. So we have the negative 1.618 DMA and then the negative 2 DMA. Again, that's exactly what happened right here for the March crash, and that's what we have literally been trading pretty much diagonal in during this around 7th month ranging bear bottom we've set back here since around June of last year. So again, around November of last year when we had that FTX crash set in. And also, you can see here that we have this, so this black portion of this band right here, you can see the fact that all these moving averages right here, even this band eventually, it's all going to converge on the point when it starts to head up kind of in this upwards tilted bull flag, as I mentioned in my previous video, how if you watch Crypto's content, he's been talking about on the lower time frames an upwards tilted bull flag. Again, this factors into the self-similarity of the market. A lot of the times when you see patterns, whether it be a triangle or whatever on lower time frames, typically that pattern will then shift into the higher time frames in a fractal-like way. Hopefully you understand what I'm trying to say with that point. I know it can be kind of confusing, but that was about all that I really wanted to touch on here on this chart. If we go to this 2-day chart, So out of these 4 fractal patterns right here, focus on the turquoise one right here. So we need to see, it's going to be important for, as you can tell, as I've been going over, we've broken out of this curved linear falling triangle right here, unlike we have ever before in each of the like 5 or so, 6 or so rejections we had since pretty much back here in January of 2021. So again, another strong suit to kind of just prove, I suppose, that the bull market reversal has begun. But again, what I wanted to point out here is we need to see break above this 800 EMA, this estimated moving average right here around 23.8, which in general just lines up with breaking above around 25,000, which is where we got rejected from. Again, the same moving average back here, which is also essentially just lining up with this white moving average, which is the 200 estimating moving average. Again, we're seeing these kind of converge on each other. What we don't want to see is the 200 EMA go below the 800 EMA. We want to see this 200 EMA kind of pick up the slack, and then as price continues to go upwards, the 200 EMA will go upwards as well, and they won't actually cross, which would technically kind of signal a, I forgot what the death cross, a form of a death cross. It would not be a good thing to see that happen. But so whenever you actually take these fractal patterns, like I said on here, like the first movement would be around like 26, 27, 28,000, then like 35 to like 29,000 would be the range for the second bump. Doing it here on this 2-day chart, it looks a lot different. The way this works out is that we'll see movement once we go up towards this 800 EMA even more. We confirm support there and then break above it with strength, and also above the 200 EMA. We'll see price move up towards around, at first, this is saying from around like end of February into the beginning of March, leading into April, early May, we'll see it hit around 35,000. And then again, like I said, range from around 30 to 35,000, as I said in the previous video. And then the second bump we'll see move up towards around like 42, 43, 44,000. And then in general, this area right here will range from around like 36, 35 to around 43,000, which again, I said is rather different from this because of the different time frames, but it's still generally the same thing. This is right here going to range from around the same time as well, from like February leading into May, and then we'll really see the final parabolic break according to these around. Let's see, this one happens around end of June, beginning of July or so. This one happens pretty much the same thing like you see right here, like July. It's a little off. This one's a little bit farther behind than the one on this higher time frame, but still, like I said, right here you can see July leading into August is when we'll finally pick up that really crazy parabolic movement towards the upside right here. And I'm not sure, because obviously the higher time frames are more viable and things along that nature, but I'm not sure really which one's going to end up being more accurate. I personally kind of just want to say this one right here is probably going to be more accurate in terms of how things fall in terms of time, but at the end of the day, I'm not really sure. Just again, in general, I think again, once we see movement towards 25,000 and we confirm that as a break above it, I think in general we'll just push towards 28 to 35,000 for the first milestone. We'll sit there for a little bit, and then after that we will push anywhere from, I know it's going to be like, it's a pretty big range, but from like yeah, I mean around 30 to 43,000 is what I think in general is where we could go. Again, kind of just factoring in what both of these charts are saying. This one pushes, I mean, 35,000 on this chart, on this weekly chart, for this 2-day chart again, is where 43,000 is. So again, I'll change it. So probably around like 35 to 43,000 we could expect around like May, June, July of this year, somewhere around that time. I think we'll probably start to see the 35 to the 43 or so $1,000 price targets. And then again, as I have been mentioning, we'll push in towards around approximately 250,000, just within the general range of 200 to 300,000, I believe. Either we'll top out sometime like very end of this year, or it will bleed into next year, like first like 2-3 months or so. Again, this 2-day chart is specifically putting the very top of the high like if I say it dead set, right on February 10th of next year. So it would likely be that we end up topping out more towards next year, if this lower time frame ends up being more accurate. Which, like I said, I don't know. There's just a part of me that has a hunch that in this regard, and given what I'm specifically talking about in this context, that this lower time frame fractal will end up being more accurate than this. But again, like I said, I would have to say November, December of this year, and then January, February, March of 2024 is likely when we'll set the top for Bitcoin. And again, like it happened last time, because of the self-similarity and where we're at in the market, it'll kind of just stagger off and make a high, as you can see right here. It kind of makes 3 tops, and then it's finally going to get dumped on towards the downside. But if you quickly go over lower time frame right here, so this is the 15-minute chart. This is what we've been seeing ever since, not ever since, but so we got our move up from the downside back here once we broke out of this curvilinear curve down here that I showed on the higher time frame chart. We entered this what looked like a bear, or not a bear flag, but a bull flag, the upward sloping bull flag that I mentioned. Broken out of it so far. Right now we've pretty much just been consolidating within around 21,000 or so, 22,000 up to around 23.3 thousand. We just recently came up and kind of tested essentially the highs we've set back here. We aren't really seeing, well, we are seeing a minor, and we did print a yellow vector candle up here, so we could likely get more of a retracement to the downside than what we've already seen. We are seeing a bearish divergence, so from right here to right here on the RSI, the price had an upward slope, the RSI had a negative slope. But you can see right here, ever since we set these pink vector candles right here, we've kind of used this 200 EMA here on this 15-minute chart as a kind of basis of return. So we could return back down to this, which is around like 22.8, and then continue to go up from there. But I'm kind of assuming right now that this kind of trend line range that I have right here will set and act as a good resistance whenever we do push towards 25,000 and kind of sit there a little bit, find support, and then hopefully break towards the upside. This is kind of lining up, as I said in my previous video, more towards, closer towards the end of this month or so. I mean, realistically, I suppose we could see another massive pump here soon towards 25,000 within the next, almost 36 hours, but I wouldn't put like a lot of faith in that. I would just say in general, before this month closes out, I think we'll likely have pushed 25,000 again, unless we see this rejection right here that I mentioned on this chart. But outside of that, to go ahead and go into this New York Stock Exchange analysis, as I've been mentioning, I personally think that we're likely going to start to see the genuine decoupling of cryptocurrency from traditional stock markets begin to unfold over the next like 3 to 5 years or so. I think it's going to be a slow process. I don't think it'll happen very quickly. We can actually see here, so you can see with these two turquoise trend lines up here, and you can see, before I go over that, you can see each of these M patterns right here. I think that's again what we'll see unfold towards the downside to this lowermost range we've set for each of these previous lows back here within this descending broadening channel basically that we've been seeing ever since we got rejected back here at these highs at around 17.5 thousand. If we do continue to push higher from here, if we push into this yellow box, we could likely get rejected from there. It might be like a bull trap or something perhaps, but as I did say in the previous video, if we continue to push higher and then we break into this yellow box, find support, and continue to break higher, then I will go ahead and concede that the decoupling is likely not starting as early as I believe it could. Although my reasoning for saying the decoupling is starting right now is not just because of what I see in the charts, it's just the general fact of where the world's at right now, and it really seems like we're going to see a massive change within the fabric of society over the next 3 to 5 years. No, not that things have already changed drastically over the last 3 years, but anyways, if we zoom in here, we'll see we've got these turquoise vectors printed right here to denote this is a top. We haven't started printing anymore. We are actually getting a, well actually are we? Let's see if I go back a little bit. Actually, scratch that. So we're not getting any form, well we're getting a minor. We're getting a minor more of like an exaggerated bearish divergence right here. You can see that this slope of this trend line range right here is more drastically positive than basically about like right here. So I mean, this is about nearly horizontal, which is what connects the 2 points that I'm talking about. So I mean, we're seeing an exaggerated bearish divergence right there, but let's checking. The lower you go, the more you start to see the bearish divergence on this chart right here on the lower time frames. Not right there for the entire portion, but actually let me go to this 15-minute. This is really what I wanted to point out. So if we zoom in here on this, we can see that we saw a bearish divergence from these 2 points right here. You can see upward slope. If I check the same thing right here, we got that bearish divergence. We have seen the RSI dip down pretty low, whereas price hasn't gone down too low. And again, this is on the lower time frames, and the lower you go in the time frames, the less strength patterns and just pretty much everything holds in general. But I just really wanted to point out that once you start going lower than this 4-hour chart, this bearish divergence starts to become more prevalent, relevant in general. But right now, I would just say it's 50-50 on what's really going to happen with respect to the decoupling in the stock market right now. If we do continue to go up from here, seeing the stock market in general break above around, so once it starts to break with strength, volume support, etc., above 16,000, and then starts to push into this yellow box, I would likely watch out for it there to see what happens. Could be a bull trap or not. But if we start to continue to go down from here, as I mentioned in my previous video, losing around 15.4 will be the first milestone, and then if we eventually start going below around 14.7 here for the stock market, the New York Stock Exchange, then we will likely start to see this M pattern carry out as we have each of these last 2 times back here within this channel. Here for XYO, this is an update here for this triangle pattern that I've showed. We've broken up towards the upside. You can see that this massive bearish candle we got right here, this major wick, found support right along the resistance line, which is good. And ever since then, we've been trading sideways. We've seen a nice bump up in price within the last 4 hours or so, which is also, it's good to see right now as well. We've seen this MACD kind of trade very nicely, as you can see, kind of just converging upon a specific point right here, which should be the 0 point, given that's what the MACD typically is going to do. At least this one that I use with these Bollinger Bands, you can see they tightened up crazily right here. Hopefully we'll continue to see this movement towards the upside. As I did mention, I do think if this breaks up towards the upside, assuming Bitcoin does as well, continues to behave nicely, we'll see a push up into this box up here, lining up with these trend lines roughly at around 2 cents or so, 2 cents to around 2.5 cents, which again, if I go back here, is just what lines up with the other major consolidation we got back here. So this was the range that Bitcoin ranged in until it got rejected from 48,000 as a more clear-cut comparison for this coin. But here, before I go over that 5-minute chart. So if we go to this XYO to Bitcoin chart, again on the 4-hourly, pretty much the exact same analysis that I just got done over it. This one right here is actually just seeing, it's less of a symmetrical triangle, more of a falling triangle. And we're actually just now, with this, I said, this nice pump we've gotten recently, breaking up out of this. So I think this is actually very good to see as well. What we don't want to see is as you can see right here, this dark blue moving average right here, this 800 EMA, which again, as I've been pointing out, is a very important moving average on all time frames. And that's a part of the trader's reality indicator if anybody's interested. But right now we need to see price not get rejected on it, and we want to see continued strength, volume support, etc. towards the upside, breaking above the 800 EMA and continuing to go towards the upside. But for this 5-minute chart, what I wanted to point out was for here, let me go ahead and get rid of this, was that I'm going to zoom out here a little bit. I mean, the lower you go down in these time frames, the more it's going to look like we're breaking out of this triangle. Again, that's the same exact chart that I'm going over right here. Obviously, we have broken out of this towards the upside, but I just wanted to go over this 15-minute. There's a likelihood that we could, given, as I just mentioned, we are broken out on this chart, and we've broken out here on the XYO to Bitcoin chart. It's not looking like the best right now, but we could be seeing some form of, you know, triangle consolidation in some form of symmetrical fashion. You know, given we have just recently broken out of this triangle, we're going to break out and do this and then continue towards the upside. Although I wouldn't count on that too much right now. We could continue to trade sideways. But overall, I do think things are looking rather good right now. We're not seeing any major bearish divergences right here on this 5-minute, which again, it's not too important because this is just the 5-minute chart. But if we go down to this hourly right here, again, currently we're not really seeing any major bearish divergence, which is good. Back here, we did get a triple bullish divergence right before we broke out of a little bit right here, and then we came back down and kind of just retested it essentially and printed this triple bullish divergence. So we got our bullish divergence vectors right here, these lighter blue candles, so this one right here and this one, and we continue towards the upside, which I believe is going to be a good thing in the long run. Again, I do personally think that we'll continue to see that breakout towards around 2 cents or so. Let's go ahead and go back up here to this 8-hour. Again, if we do see that, that is going to correlate with breaking above this 800 EMA on the 8-hour chart, which again is, like I said, it's a pivotal moving average that we need to see price go back above and continue to trade above as well. Here for an update for Phantom. So far it's behaving rather nicely with respect to this fractal pattern that I have pulled from the previous bull market, which again just goes back to what I went over with this chart, the self-similarity for Bitcoin and whatnot. I'm sure many of you are already well aware of how pretty much all the altcoins look and move with Bitcoin and then Ethereum as well, but I still think personally that Ethereum's following Bitcoin. A lot of people think that Ethereum's the top dog, the one that moves everything now, but I think that's rather asinine to say. But so far we're following through pretty nicely. Basically the connection that I'm pointing out here is so I guess I'll put some circles around it to make it look a little bit easier. So where we are right here currently trading is basically where we are right here on this fractal pattern. So I'm gonna go ahead and put it back on top of each other now that I've pointed that out. So given that fact, I do believe we'll continue to likely kind of just straddle our way upwards here towards this 800 EMA again. This is going to appear on all these coins that I'm going over. It's a very pivotal moving average. And you can actually see once price will converge towards the 800 EMA, 800 EMA to price, and then we'll see this major parabolic movement towards the upside heading into this range right here, which is directly correlated with the double top that we set back here for Phantom. From October of 2021 to January of 2022. And I think we'll likely trade within that range for a little bit until we see the final parabolic leap towards around $50 to $70. And whether or not the market makes a double top, again, going back to this chart, I'm not sure if we're actually going to see something. So basically like this, I'm not sure if we'll see something like this when we go into this next top, and then we'll kind of come down and see this kind of like relief rally into a double top, or if we'll just see this right here, this single top, and then we will enter basically the next iteration of phase 2 of Bitcoin's cycle system, which again is 2014 into 2015 bear market heading into the 2017 bull market high, which it's roughly going to look something like this. We'll range out for our bottom somewhere within like 2025, 2026, heading into 2027, and then I think we'll see the release towards the upside, which again it still nicely lines up with finding support along this this trend line range that I mentioned earlier with these 4 touch points so far. I don't think it'll be perfect. I think there's a likelihood we'll fall below a little bit, but again, you can still see that it's pretty much just snaking itself around this ascending support range right here. So if we do see that double top, I think we'll likely see Phantom go towards around $400 to $420 or so. Around, again, probably, like I said, mentioning like 1, 2, 3 months, January, February, March into 2024. But here finally for JASMY, as I mentioned, I had some insights on this coin recently. This might end up being the best mover in the upcoming bull run. What I did was I went to CoinMarketCap to see if there was any more data on here that is not on TradingView. There is not, but what I saw, I might not even be able to find it on here, but somebody was just posting, I was looking at all these chats, that during the most recent World Economic Forum that has to do with Davos, Bilderberg Group, Klaus Schwab, a bunch of elitist people that are, in all honesty, trying to bring terrible things to the world right now. If you're not informed on all of that, I suggest you get informed on it, because what they're doing is not good at all. But JASMY is connected to BlackRock, the World Economic Forum, etc. Which again, those people have negative motives and whatnot, but they also have a lot of money and they're trying to really change the fabric of society right now. Which just means that this coin is definitely going to inevitably, I think, explode and have very massive movement. So what I want to point out on this chart is I have it maximum. I think it can move around 2 million%, which is a 20,000x going into the next bull market. If it does this and it tops out around the same exact time Bitcoin does, then it could actually have, I mean, technically it could have a market value up to what Bitcoin would be worth at its upcoming high, assuming it's at around approximately 250,000, which is like 4.7 like 5.7 trillion or so. So if JASMY wants to like literally get neck and neck with Bitcoin's market value, again assuming that they top out at around the same time, it could push double what I'm saying, so up towards like $88-90 at around 4 million%, 40,000x. But if this pushes up towards 44,000, my bad, $44, 2 million%, that's going to give this a market value of around 2.3 trillion, which is going to be roughly half of what Bitcoin's market value is, again assuming that they top out at the same time. That is very key. They have to top out at the same time so JASMY does not surpass the market value of Bitcoin, which is, again, really all that should matter. Bitcoin's a fundamental store of value for crypto. It eventually will be the fundamental store of value for the entire global economy and financial system, because that's what it was designed to be, and it goes into the decoupling that I was talking about earlier. But I mean, like I said, this could be literally, if it's not going to be the absolute best mover and it doesn't go crazy like this, then I think it's probably going to be in the top 5, even if it just pushes up to the previous area back here where it got rejected at this 0.618. That's a 10,000% move. That's 100x. That not many coins even do that. If it pushes up to the previous all-time high, that's a 124,000% move. That's a 1,240x. If it just goes to this 1.144 at around $8.20, that's a 3,360x at a 336,000%. My bad. Yeah, 336,000% move. But I mean, even if this thing does half of what I'm saying, that's 1,000,000%. I mean, that's going crazy. Like, that's berserk. That's going absolutely buck wild. This is a technology in terms of blockchain solutions and whatnot that has to do with IoT technology, so the Internet of Things, which factors into the metaverse. Like, for example, cars will eventually be integrated as IoT technology. Your speakers could be integrated as that. Your laptops, your phones, literally everything technically. I mean, especially like the Apple glasses or like Sony glasses, Google glasses. I mean, that's essentially IoT technology. So, I mean, this is going to be massive at the end of the day. It also brings democratization to your data. So, like, you know, when like websites ask you for cookies and whatnot, or like, for example, TikTok having literally access to just about all the data on your phone. With this, you'll be able to basically have democratization. So basically, you'll be able to get paid for allowing your data to be shared and whatnot. But the last thing that I wanted to point out on this, so if this tops out way before Bitcoin does, then that's going to bring the price target down very low. Again, I'm just going to go ahead and generally say, let me get my bubbles out here. So we're going to say, we're going to put some price targets on around $8.20 and $20. And then the final one I think would be around $44 if it attempts to go that high. I mean, we've seen this pretty much in a falling wedge, falling triangle. We've obviously broken out on it pretty early. We saw essentially a triple bullish divergence right here at this bottom. This MACD has been converging towards zero. It's getting close to it. Eventually it's going to break above it and release a lot of pressure. The RSI is heavily oversold right now, which that's not a terrible thing. The RSI could likely just do something like this right here and just kind of stay in this upper range and continue this, you know, this pump towards the upside, as you'll see many coins do as they move towards the upside. But that was about all that I really wanted to go over and touch on in this video. Again, just to briefly touch on Bitcoin, right now it's important that we do see, again, with respect to this, we don't see a break below, this is on the weekly chart, we don't start to break below around 21,000, 21.4 to 21,000 right now is the key area to be looking at. If we start to see price drastically go below, I'll say just in general 21.5 thousand, that will likely not be too good. Again, right now on this 15-minute chart we sit at around 23,000, and actually that does pretty much nicely line up with this, not pretty much, it exactly just about nicely lines up with this ascending channel we set in, and also this 800 EMA sitting at 21.7 thousand. So we don't need to see on this 15-minute chart price go below this 800 estimating moving average right here, which again, if you're interested in using it and you just want to follow along with what I'm saying, for whatever reason, this is a part of the trader's reality indicator that you can choose to use. But like I said, that was all that I wanted to touch on in this video. I hope you guys enjoyed. Hopefully you were able to take away something from this video, learn something. All that being said, I hope you all have a blessed day.
Ooh, I'm regretting now.